Well, hello and thank you for joining me for another iTWire video with top Australian and international executives. Today I have with me Scott Anthony. He is the Managing Partner in Innosight and one of the keynote speakers at Day 2 of CeBIT. Welcome to the program.
Thank you, Alex. Thanks for having me.
So I thought probably best off to start by asking you to tell us a little bit about yourself and your company Innosight and what you do.
So Innosight is primarily a management consulting company headquartered in the United States with offices in the US, Lausanne in Switzerland, and Singapore, which is where I'm based. The primary thing we do at Innosight is we help leaders at large companies confront the challenge of disruptive change. They've read the case studies, they know the horror stories, the Kodaks of the world that have failed in the face of disruption. They don't want that to happen to them, so we help them with that. We also have a small venture capital business that I run out of our Singapore office where we go to the other side of the equation and invest in the startup companies that hope to disrupt the big guys.
Sure. And just a little bit personally about yourself, how did you get involved in the whole startup and disruption business? I mean, were you thinking of this from a young age, or did it sort of come to you in university, or what's a little bit of that history?
Yeah, so it's a nice combination of things. So right after I graduated from my undergraduate work, I went to work for a great big management consulting company, McKinsey & Company.
Yeah.
Did that for a couple years, left to go join a startup that blew through $1 billion of capital. Different story for a different day.
Yeah.
I then went to
That was disruptive.
School. It was just a different definition of disruptive, but definitely disruptive.
Yeah.
So I then went to the Harvard Business School, and in my second year I met Clayton Christensen, who coined the term disruptive innovation. He had recently founded this company called Innosight. I didn't join immediately. I stuck around for a couple years to do research with Christensen. We wrote a book together. Then in 2003, I joined the very small team at Innosight. There were essentially 3 of us at the time. There are about 100 of us now. So we've had a nice run over the last 13 years.
Excellent. So your keynote this morning was entitled Solving the Transformation Equation, Harnessing Transformation and Disruption for Strategic Innovation. Now, for those who weren't at the keynote, and the stream won't be available to watch for about a week or so just give us the short version of what you spoke about and some of the key things that you'd like people to take away from that until they get to watch it in full themselves.
So I tried to organize everything around a few key points. So the first key point, if you borrow a phrase from Game of Thrones or the book on which it's based, the Starks tell you winter is coming. The first key point is it's not winter, it's disruption that is coming to every nook and cranny of the global economy. There's a sub-point to that where this is actually really good news because disruption, while it sounds scary, is a massive growth opportunity. I then talk a little bit about how you seize that opportunity by describing best practices of innovation, urging the audience to really focus in on the customer and the job they're trying to get done, borrow great ideas from outside the market to try and solve those problems, and get really good at testing. Described how big companies, as much as we think that they struggle with innovation, and they do in many cases, have a really key role to play in driving disruptive growth. And then finally described how you can truly change the soul of a company by transforming. And I laid out the very simple equation that we have about how you transform. It's ABC. Transformation A is reinventing today. Transformation B is creating tomorrow. And the C stands for the capabilities link that allows you to do both of those together.
Sure.
So there's a lot behind that, but that's at least some of the highlights.
Absolutely. So where can we find out, like you must have a blog or somewhere that people can find out more about this in more detail, and perhaps you've written a book about it, I'm not sure.
So with corporate website, www.innosight.com, I write pretty frequently for the Harvard Business Review, so www.hbr.org. The idea of dual transformation, I've got a book that is coming out. It will be out either late this year or early next year. So there isn't a book yet on it.
Yep.
The audience today got a sneak preview of some of the ideas in the book.
Sure. And look, as soon as that video is available, I'll be publishing an article letting people know where they can watch all the CeBIT keynotes, because they've all been quite fantastic and very interesting to experience and watch. So what industries are you watching now that will have to grapple with disruptive change over the next few years? I mean, we've already seen transportation being disrupted massively, and the hospitality. Everyone knows those examples of the Ubers and the Airbnbs, but obviously, as you said, everything is ripe for disruption. So but what's next? Besides everything.
So everything does have to grapple with it, but 3 that we're watching very closely. The first is financial services. I think you've had this huge wave of fintech companies that are coming, and anyone who makes money making markets and trading on inefficiencies, that's going to change.
Yeah.
And you look at the big 4 banks in Australia, they're all undergoing big digital transformation efforts. I think they need to do much more to really rise to the challenge and opportunities that are in front
They
of
have
them.
to double their efforts, right, or triple them.
At least, because I think a lot of when people use the phrase digital transformation, what they mean, and I use this example today,
Sure.
there's a story about how Kylie Jenner dyed her hair blonde, and that was a great transformation.
Yeah.
I'm sure it was different, but if digital transformation means fax machines get replaced with email,
that doesn't quite cut it.
no,
not today. Maybe 20 years ago.
Than that.
Yeah.
So you got the banks. You then have the telcos, where you've got a world where, again, you've got a lot of new technologies coming. They have transformed in many cases. Here you've got Telstra and Optus that have gone from providing voice to providing data. But then you've got to think about the value-added services that you're going to offer as you run the risk of being really dramatically commoditized. And of course, you've got people making bets. Optus has bet on content. Telstra has bet on health and other things. Who wins, who loses, who knows? But that's an industry that's changing. The third is healthcare. If you look at the underlying technologies that are being developed by companies all around the world, in 10 years, healthcare could be fundamentally different. The challenge is many of the human behaviors are not changing as quickly as the underlying technologies. That presents an opportunity if you're a country like where I'm based in Singapore, when you integrate all that together and you really can reconfigure and reimagine the system. It'll be interesting to see.
Sure. And are there any other companies or industries you'd like to mention that you've worked with over the past couple of years to help them with their transformation push and change?
I think a couple examples that we like to highlight, and our clients have given us permission to talk about both these things, which is important.
Yeah.
I think the first that shows the ubiquity of some of these ideas is a company called Manila Water in the Philippines.
Mm-hmm.
Classic challenge. So the company was formed in 1997 with a mandate to essentially solve a crisis where only 1 in 4 households in Metro Manila had 24-hour access to potable water. You fast forward to 2013 when we entered the story, they had gone from 25% to 99%, great success story.
Yeah.
But then the question is, what do you do next?
Yeah.
And this is the question that leaders have. The victim or the price of success is you have to change because you can't keep doing what you were doing better.
That's right.
So what does Manila Water do?
They say what got you here is not what's going to get you to the next destination.
Exactly. Imagine Manila Water. They go from 25% to almost 100%.
Yes.
You can't go to 400%. The math doesn't work.
Right, yeah.
So what do? Transformation A, they focus in the core. They begin to expand geographically into new markets. Transformation B, they go from being a water utility to a water services company. And this example really helped to highlight to me how these ideas, they can work in everything. If you can work in a regulated industry that looks really basic, it shows the power of it.
And what does a water services company do differently to a water industry in a nutshell?
So here's an example. So you go and launch different businesses beyond you turn on your tap and water comes out. So an example, in Metro Manila, the water that runs through the pipes that go into your home, very high international quality water. What happens after it hits the tap in your home depends on pipes and other things that Manila Water has no control over. So there's a pretty big business in Metro Manila where people will go to water refilling stations, where people will get water from a clean tap, run it through an ionizer that does nothing, and then sell it at 1,000% markup. Manila Water said, well, we can do that better than any of the mom and pop stores that do it in the market.
Sure.
We're going to get into the packaged water business where we will go and distribute big jugs of water. So you've got that, you've got a business where they're treating commercial wastewater. You go from the basics to thinking about where are there inefficiencies that you can go and address with a different business and different business model.
And was there a second company you wanted to mention?
So that second example, I think, is a good example of a company that demonstrates a key component of transformation, which is the courage to choose before you need to. This is a U.S. healthcare company called Aetna. Its CEO, Mark Bertolini, took over the job in 2011. He could have had a pretty easy ride. Record earnings, the company was growing. The Affordable Care Act, otherwise known as Obamacare, had been passed. 50 million consumers have to be served. In the face of all of this, he makes the decision to blow the company up because he says in the long run, if we don't change it, will be
somebody else will blow it up for it.
And that is it is a very courageous and hard thing to do, but this is what leaders need to do today. If you wait until you're on a so-called burning platform, it's too late. What do you do when you're on a burning platform? You burn to a crisp or you jump and pray? Those are bad strategic choices.
Now, one of the questions was here about when does human behavior catch up with the underlying technology of personalization and transformation? But are we up to that point yet?
Well, it ties a little bit to what will it take for healthcare as an industry to really transform. Because healthcare is so complicated because you've got doctors, you've got regulators, you've got in some markets insurance, and you've got patients and humans.
All of whom need personalized care. You can't just It's not just a factory line, I'm giving them all the vaccine.
No, and a chain is only as strong as the weakest link, and if you're trying to change a system and any part of the system fights against it, it's a problem. And I think one of the notions you always have to remember is humans are involved in any kind of change effort, and the things that succeed make it simpler and easier for people to do the things they were trying to do. The things that fail try to force people to adopt priorities they don't have. And this is something anyone trying to drive change in healthcare really needs to think about, or they're going to hit the proverbial brick wall.
Sure. Now, what are your thoughts on disruptive innovation in Australia, and how far are we behind or ahead of the rest of the world?
It's a really interesting question. I moved to Singapore in 2010. The first 3 years I was in Singapore, I came to Australia as a tourist and brought my family here. We loved it. Then calls started coming in around 2013. You began to hear this note in people's voices. It's been a great few decade run, obviously, in the country, but manufacturing is gone. The mining industry is dealing with
declining,
issues.
Yeah.
What do you do next?
Yeah.
So this notion of dual transformation, reinventing today, creating tomorrow, I think is the Australian problem writ large. And I think, honestly, Australia is behind the curve here. I think a lot of what people are doing under the guise of transformation is really doing business better digitally rather than fundamentally rethinking and reconfiguring. The startup ecosystem has developed in Sydney, Melbourne, and other parts of the country. It's getting better, but talent drains. It goes to Silicon Valley rather than staying in Australia. I think there's more work that needs to be done on both sides. And if not, Australia's a beautiful place. The universities are great. There's a lot of reason why people will continue to come here. But Europe's a great museum too, and that's not the place you want to end up at.
No, I mean, that's right. And transformation, as you're implying and clearly stating, I mean, it's for countries too, not just companies, not just individuals. Because as you say, otherwise we just end up as a nice place to visit, but no one wants to. You don't want to live there. It's just a nice place to visit.
No, those who live there then have to deal with what do you do the months of the year when people aren't visiting.
Yeah.
Economically, that's not very good.
We can't just be giving everybody haircuts and mowing each other's lawns.
Yes, exactly.
As the famous cliches will say. So, tell us a bit about some of the best-selling books you've written. You were saying your first before was in 2004 when we were speaking earlier, and that was about disruptive innovation. And does it actually work? Clearly, to some degree it does, otherwise you wouldn't be here 12 years later. But I mean, the things you talked about in your first book, how have they panned out?
Yeah, so the first book that I wrote was Seeing What's Next. It was with Clayton Christensen from the Harvard Business School. And it was pretty provocative, we thought at least. So we made the case in the book that you can use these models of disruptive change to predict how industries will change, who will win, who will lose, etc.
And you would have made a bunch of predictions in the book.
And we did. We had 6 chapters, each looking industry by industry. We looked at aviation, healthcare, education, and a few others. And look, we didn't get everything right. We got some things actually quite wrong. We learned from those. It makes the prediction models better.
Yeah, absolutely.
But we did get a lot right. And at the end of the day, what we found using good business theories is, at the very least, they help you ask better questions. And that's really all that you're looking to do. The world's complicated. Humans do really weird things sometimes. So you can't get to perfect predictability. But disruptive innovation, in our experience, is as good a model as you'll see for trying to understand what's going to happen.
Sure. Now, and you mentioned also before that you were a venture capitalist, and in our previous discussions before we record on this interview, you were saying that some failed and some had succeeded. So why did the successes succeed and why did the failures fail, and what were those companies?
So we've made 10 investments to date through the investment arm that we run out of Singapore. We make about 500,000 Singapore dollars seed stage investments in startups. And of the 10 investments, we've had 3 that you would qualify as successes, 2 that were bought for cash by bigger companies, 1 that was bought for stock by a bigger company, 2 that died, 2 that didn't make it, and 5 that are still out there and look pretty good. 22% internal rate of return. Everything looks good. Yeah. So the first couple exits, one was a company called The Mobile Gamer, which followed classic disruptive patterns. It was taking mobile games that you would play on smartphones and making them accessible to people who were using still basic handsets in markets like Indonesia, Vietnam, and the Philippines. Mm-hmm. It was acquired by a joint venture between Singtel and SoftBank. The other success story, Wi-Fi, and again, a disruptive story, what they did is take technology and allow you to very precisely position or understand where somebody is inside. Outside, you get very precise positioning through GPS solutions.
The indoor location is
the
key thing.
So here you triangulate off of different
beacons.
Wi-Fi routers. This is pre-beacons that they started.
Yep.
And you can get very precise information.
Wow. Yeah.
So the good news about Wi-Fi, it was sold to Ruckus Wireless. Everyone did well in the deal.
Everyone knows Ruckus, yeah.
The one downside, I would say in hindsight, and this is now what what we're focusing on, going to raise more money, is had we had a little bit more money to play around with, this is a company that I think could have been much bigger than it was, but we didn't have the capital to do follow-on investments, so you're really happy when someone calls.
You could have bought Ruckus rather than Ruckus buying you.
Maybe, who knows? But you think about what you can do with precise indoor you can do all sorts of really fun service-based applications, but it requires capital to do that. So the ones that didn't work out, one of them was, it was painful. It was a company called Versonic. They were trying to disrupt the audio console market, taking $25,000 complicated gear and doing it in a $2,500 box using basic, simple GUI software. It's a great solution. There was a market for it. The problem was they just ran out of money. Right. And that's the number one reason businesses fail, is they run out of money.
That's pretty disruptive.
It was a hugely, it was a hugely disruptive model, but the running out of money was the bad kind of disruption.
And any other failure you want to mention briefly? I know people don't want to talk about it, but it's education.
We then had a round of failures before this. So the investment arm, I think Versonic would be the one I'd highlight. Running out of money is bad. Before the investment arm, we had an incubation arm where we tried to create our own businesses. Sure. We had a nice string of failures there. We had a lot of businesses that didn't work, that taught us a ton. This was the first couple chapters of my last release book, The First Mile, drew on what we learned from failing to create a medical tourism business in Singapore, failing to create a barbershop business in India, failing to create an online education business in the US. In each case, the insights on which those businesses were built were very sound insights. The process that we followed to translate the insights into profitable businesses wasn't right. Now, good news again, we've learned from it and we now do it much better, but we've got the scars to show that this is what doesn't work. And knowing what doesn't work is a really important thing.
Failure is an important part of success. You can't succeed without it.
Absolutely. And this is one of the lessons I've learned. So I've seen hundreds, if not thousands, of ideas in my time in this space. They're all the same. Every idea is partially right and partially wrong, but you don't know which part is which when you begin.
It's like advertising. You don't know which 50% is worthless.
But the difference between advertising is you can figure it out. One of the lines I use is the mistake you make is you say, I'm going to figure out which part is which through analysis. So you go and do financial forecasts and all that. You then go and execute what looks like a perfect plan. You learn the lesson taught by the great American philosopher, actor, and occasional boxer Mike Tyson, who once said everybody has a plan until they get punched in the face. And the punch is the perfect plan doesn't exist. So what great innovators do, like the Wright brothers, is they fly kites. They build wind tunnels. They learn through trial and error experimentation. Startups get this. You've got lean startup and other things to do it. Big companies need to embrace this as well.
So how do you think the world will look like in a decade? Completely different and transformed, or pretty much the same on the surface, but it's like the duckling, paddling furiously underneath to make all this disruption real and long lasting?
So the pace of change is accelerating. That statement would be true in just about any year since the Industrial Revolution. As science continues to advance. It's
like Charles Dickens, it was the best of times, it was the worst of times. I mean, what's changed?
But you really started to feel it now. So we recently released some research available on our website that looks at past turnover of the S&P 500, the biggest companies on U.S. stock markets, and makes a prediction that over the next 10 years, 50% of the S&P 500 will turn over. Some of these will be companies that just fall behind the pack, some will merge together, and some will fail. Those that are the great companies 10 years from now, some will exist today, but many will not. They will be companies that are formed in the next 10 years. So it's just one small data point that suggests 10 years from now, the corporate landscape is going to look very different. The landscape of us as individuals, as you have personalized medicine we talked about, virtual reality, 3D printing, additive manufacturing, robots and drones, Internet of Things, and all these things come together. What it will look like, I don't know, but it will certainly look a lot different.
And it's a little bit like looking over the past 100 years to see which companies were around then that are around today. I mean, there's Ford and IBM that I can think of off the top of my head, but there aren't too many more.
General Electric goes back about 130 years. Procter & Gamble goes back about that length. And there's a couple more, but it's a very short list. And if you look at how those companies have performed financially, if you go back into a time machine and invest in the survivors or invest in a market index, you'd be better off investing in the index.
Right.
It's remarkable.
Yeah. So as we get to the last couple of questions, I always like to ask the people I'm interviewing if they could please share the best piece of advice they've ever received to help get you where you are today, or at least some great advice that's really helped you.
I remember when I first started my first job out of university, working for this consulting company, the first engagement manager that I had said, never stop asking questions. Ask as many questions as you can. I promise no one will ever say that's a stupid question or you're asking too many questions. And I think it was great advice, because often we make assumptions and then we have beliefs that harden because we're not willing to ask questions. And I think the number one trait that we all need as leaders over the next generation is curiosity. And the curious mind is always questioning. So Linda Bush, thank you for telling me to do that.
And of course, you were talking about people making assumptions that can hurt them. I mean, there's that famous saying, if you assume, it makes an ass out of you and me.
Yes, exactly.
So it's incredible. There you go. So do you have any final messages for iTWire viewers and readers and for your current and future customers?
So the final piece of advice that I would offer is dare to try. Now that's not an accidental phrase. I've stolen this from Tata Sons, largest conglomerate in India. This is a prize Tata gives out every couple years to a team that does something that doesn't work, as long as they learn something during the process. Big prestige prize, more than 300 teams applied for it last year, and it's a small signal that this is an organization that's willing to break eggs and push boundaries. And I think companies and I think individuals have to dare to try, because if not, you will play it safe and then have your industry, your job, your career get disrupted, and that's not what any of us want.
Absolutely. Well, Scott Anthony, thank you very much. I wish you the best of success and hope to see you at future CeBITs.
Thank you very much, Alex. Appreciate all the great questions.
Thank you.